All right, my friends, well, another month is in the books, and today I want to share with you what went down in my dividend portfolio in the month of February. And real quick, for those of you who are new to my channel, welcome aboard. Here we strictly talk about dividend stocks, and twice a week I'm coming to you guys with new videos, most of which are dividend stock analyses and updates, as well as videos documenting my own investing journey, like what we'll be doing today. Throughout this video, I'll be sharing my entire portfolio with you guys, and we'll be going under the hood to see how my stocks performed in the last month, all of the purchases I made, and I'll give you some insight as to which stocks I plan to pick up in the month of March. So be sure to stick around until the end so you don't miss a thing. Anyway, before we get rocking and rolling, if you are excited for a great month on the market, go ahead and give this video a big thumbs up. Also, leave me a comment below and let me know which stocks are in your watch list for this upcoming month. I'd be very curious to hear if we have our eyes on any of the same ones. Anyway, thank you so much for doing that. You guys are awesome. And now, without further ado, let's get into it. All right, guys, so we are taking a look at my dividend stock portfolio here on my dividend portfolio tracking spreadsheet made on Google Sheets, and this is version 4.0 of the spreadsheet, and I give this away for free. So if you guys want to grab this for yourselves, the link to do so is in the description of this video. And this is a pretty nifty tool, guys. This is the dashboard page right here where it's got all of the important information about our portfolio and some of the stats on how it's performed over time with the diversification. And then we've got the portfolio summary page right here, which is where you input all of your holdings, all of your different stocks, and it's got some other really cool tabs and features like an intrinsic value calculator where you can try and calculate the fair value of any stock you're looking at. All you need to do is click the link and it'll open up a templated version of this spreadsheet. Guys, this part's very important. In order to start being able to input all of your data, you need to do one thing first. You need to go to File, okay? You need to go to Make a Copy right here. Once you click this, you hit OK. It will make a copy of the spreadsheet template and it'll open up something very blank, a much more blank version of this. It won't show the portfolio value, the monthly income, the diversification, all that stuff quite yet. You just need to start inputting all of your information and this stuff will show up. Anyway, getting into the update, guys, my portfolio is currently valued at $34,388.46, which as you can see is quite a bit higher than it was this time last month by over, $1,000, over $1,100 basically. And my annual dividend income at that time was about $1,585, which right now it's up quite a bit more as well. We're up over $30 just in the last month of annual dividend income, which right now it's sitting at $1,617.61, which puts me at almost 81% of my goal right here, which is to reach $2,000 in annual dividend income by the end of September. And we are almost 1/3 of the way to the 5-year goal, which is to reach $5,000 in annual dividend income by the end of September 2026. So I have about 4.5 more years to get to that mark. And I will say, guys, pretty much all of my gains for the month came today. As I'm recording this video, it's Friday, February 25th. Surprisingly, a very good day on the market. I personally am up just over $1,000 for the day with a gain of almost 3% just for the day, which may be the biggest gain that I've seen since I started dividend stock investing. But yeah, today was surprisingly a very good day on the market. And right now, as I'm recording this video, we are in the thick of things with this whole Russia-Ukraine conflict. And so that's bringing a lot of volatility in the market. I really thought that we were going to see red today, and in fact the last couple days, but it's really not turned out to be a bad day on the market. Anyway, guys, that's how my portfolio has been performing overall in the last 30 days. Now, I want to break it down and show you which of my individual holdings have performed the best and the worst in the month of February. So going over to Seeking Alpha right here, I have all of my dividend stock positions pulled up here. We have them organized by 1 month performance. So at the top are the best performers in the last 30 days, and then at the bottom is, which we'll go down in a moment, those are going to be the worst performers. So the best performing stock in my portfolio in the last month was AbbVie, who saw a near 10% gain just in the last 30 days. It's pretty unreal, and AbbVie is right at the top of its 52-week high, and it's probably going to keep pushing that number higher. And the same is true with Chevron. In the last month, Chevron's up over 6%, definitely at 52-week highs with this company, and Chevron's just been killing it lately. I think my position right now as we're recording this video is up total 52%. Another stock that's performing really well for me in the last month is LMT, Lockheed Martin, which is up about 6%. ORCC surprisingly had a really good month, up about 5.7%. Now we're going to get into some of the biggest losers. Now scrolling all the way down to the bottom, starting with the biggest loser, 3M. In the last month, 3M is down almost 17%. And as you will find out in just a moment, I've been picking up some more 3M. I've definitely been buying the dip, as they say. And coming in second place place for the biggest loser in the last month. No surprise, this is AT&T. Intel's also down quite a bit, guys, down 10% in the last month. Then we have some others like AWR, Starbucks, Southern Company, Procter & Gamble, who all saw pretty big losses as well. And going back to Starbucks, guys, as we'll talk about in just a moment, Starbucks is another one that's really taken a hit. They're down 20%, almost 21% in the last month, but I think year to date, this might be their year to date performance right here, down 22.19%. Yeah. But that's just how it goes on the stock market, guys. Stocks go up in price, stocks go down in price, at least in the short term. But guys, the whole premise behind dividend investing is to buy these companies and hold them for the long term. And in most cases, if you're buying reputable companies like Starbucks or 3M, or Johnson & Johnson or Procter & Gamble across a long period of time, if we're talking 20, 30, 40 plus years, you will have come out pretty positive by owning these stocks. And having said that, guys, as it pertains to some of these big losses, like seeing a 7% loss or an 8% loss or a 17% loss in the last 30 days, it doesn't concern me, especially considering my primary objective with owning these stocks is not so much to have them appreciate in share price. And sure, that's important with some of these stocks. I mean, you want them to do well, but at the same time, in the short term, it makes them cheaper to buy right now. We're able to buy this cash flow for cheaper than we could this time, 30 days ago. 3M, we could buy the same amount of cash flow, the same amount of dividend for 17% cheaper than the start of February. So to me, that's pretty cool. It's just like buying a t-shirt, you'd rather buy it at 50% off than you would at full price. And now before I forget, I want to jump over and show you what's been going on in my second portfolio, which is my Roth IRA on M1 Finance right here. It's not a big portfolio. It's one that I started at the beginning of 2022. So I've only been able to contribute to it for the last couple of months now. And overall, it's down about 5%. It's really not off to a great start, but that's okay. Realistically, I can't touch these funds until I'm basically 60 years old. So I've got, I'd say at least a few years before I have to worry about the performance of this portfolio. And then in the last month, guys, we can see that I'm barely up a little bit in this portfolio, just up basically 0.5%. And kind of my game plan with this portfolio, it's a very hands-off, it's a very passive portfolio. That's why I called it easy money, because it's probably going to be the easiest money I'll have ever made. And in this portfolio, guys, I basically am invested in 5 different Vanguard ETFs. We have VU, VXF, VYMI, which is the International High Dividend ETF, VBR, small caps, and then VWO, which is an emerging markets ETF. And basically every week I'm throwing some money into this portfolio and it automatically invests it for me. And I think coming up in March, I'll start getting some dividends for this portfolio, which will be very exciting. And now from here, guys, I want to move on and show you all of the stocks I picked up in the month of February, both in my Charles Schwab portfolio and in this M1 Roth IRA right here. So as you can see on the screen, we picked up a pretty diverse batch of stocks in February. So the first one I contributed some money to is Intel, and I invested $105 into Intel in February and picked up about 2.25 shares of that company. I also invested about $150 into 3M. I mean, like I was saying, it's at such a steep discount, I couldn't ignore it. And in the month of February, I got almost 1 share of 3M in total. And then moving on to the third stock I bought, that was Starbucks, which as you guys saw is another one that's at a very nice discount. I put $100 into Starbucks and got just over 1 share of that bad boy. And then moving on to the fourth stock I picked up, I basically every week contributed $50 to Snap-on. And in the month of February, I spent in total about $205 on Snap-on and got just under 1 share. And then the last individual company I contributed some money to was AT&T. Not too much, only $55 invested into AT&T in February and got 2.25 shares of that to get me to basically 100 shares of AT&T. I'm like half a share away, but I'll be able to get there next time I get a dividend from AT&T. And then I also, every single week, as I normally do, I invested $50 into the Roth IRA, spread amongst those 5 ETFs we just saw. And all in all, guys, the total contributions I made to both portfolios was $815.01. All right, guys, now moving on, I want to take you inside my watch list. I made a couple moves on my watch list in the last month. I removed 2 stocks. I removed Citigroup and I also removed T. Rowe Price. Not because I think they're bad companies. They're just ones I don't want to buy them. I did add another stock in the financial sector to this watch list though, and that is SRCE, which is First Source Corporation. It's a regional bank based out of Indiana, and I still need to go through the financials of this company a little bit deeper, but one of the big reasons it caught my attention was because of the dividend. I mean, if you see here, the forward dividend yield is nothing crazy, 2.61%, but the payout ratio is very low. Basically 25% of their cash flow they're paying out in dividends. And then they have a really nice 5-year growth rate. This is one of the things that caught my eye. 5-year growth rate of 11.3%, which is pretty high. Then they also have a very respectable dividend growth history, along with that high growth rate of 33 consecutive years. So not only are they a dividend aristocrat, but they're a high growing dividend aristocrat. And so that definitely stuck out to me. I like the idea of adding another financials position to my portfolio, but I'm just not certain which one. And I mentioned I removed T. Rowe Price and Citigroup from the watch list. Those, for whatever reason, to me just didn't seem like the best fits as far as financial stocks go for me. And now, guys, getting into some of my future plans for this portfolio, I want to go back to my portfolio here. Basically, what I plan to buy in this upcoming month, guys, it's going to be more or less the same companies that I bought in the month of February. So I want to continue building out my position in Snap-on, and that stock is actually coming down a little bit in share price. So as time goes on, that seems to be getting more affordable, which is great for me as I'm picking up more shares. I also definitely plan to add some more Starbucks. I will be buying some more 3M. We'll be buying some more Intel. Essentially, guys, I want to spend some time focusing on the discounted positions in my portfolio. And I talked about maybe adding like a financial stock, but realistically, I'm just blowing smoke. For the time being, I really want to focus on the stocks that I already have in my portfolio, build those out, especially while some of them are at such nice discounts like the ones that I just mentioned. Anyway, that's what's been going on in my neck of the woods this last month, guys. And now I want to hear from you. Which stocks do you plan to pick up in the month of March? I'd be very curious to hear if you guys plan on buying any of the same ones or what stocks are looking like good pickups in your opinion. If you have any you're looking at, share them in the comments below. And with that said, I will now get out of your hair. If you enjoyed this deep dive into my dividend stock portfolio, then let's keep this party going. Check out these 2 videos right here for more content on dividend stocks, and consider subscribing to the channel if you want to keep in touch and see more videos from me in the future. Anyway, thank you so much for watching, guys. I hope you have a great day, and I will see you in the next one.